The views and opinions expressed by hosts and guests on Patriots with Grit do not necessarily reflect those of Patriots with Grit LLC, its founders, and owners.
Get ready for truth bombs and guidance from conservative leaders and entrepreneurs from God-fearing, freedom-loving, truth-telling, patriotic Americans. Welcome to Patriots with Grit. Now let's jump into today's episode with your host, Darren Ross.
Randy, one thing the government's been telling us for decades is that we owe taxes on everything, and now they're wanting to say we even owe tax on digital currency.
Well, our guest today is going to tell us otherwise, that the IRS never passed any laws, and the truth's been hidden from us right in plain sight.
John Singleton joins us today to expose the myth of crypto taxation.
He's also going to show us why millions of people have been paying what they never owed.
Well, John Jay Singleton, it's awesome to have you on here today, my friend, here at Patriots with Grit. I know a lot of people out there, Randy, in our world have been talking a lot lately about digital currency. And I think a lot of people our age, you know, in that late 50s, early 60s, whatever, are still stuck in that mindset of traditional 401ks, IRAs, stocks, bonds, mutual funds. Some of them, you know, if they're as old as you, Randy, they may still be doing CDs. But anyway, so you know, John Jay Singleton's going to come on here today, and he's going to talk about some options in this digital currency area, Bitcoin, and maybe some other things. So, John, thanks so much for coming on here. We have not really had many episodes over the last 3.5 years on this topic, and Randy has kind of delved into it a little bit, and he wants to get out of that CD investing era and kind of more into more advanced digital currency. So we thought, well, what better person to have on here than you? So thanks so much for coming on here and be willing to share with our audience.
Well, thanks for inviting me. I appreciate it.
Well, tell us a little bit about your background so we can kind of set the stage for the topic today, which I really want to talk about, and I think you do too, the taxation of the crypto. So we're going to dive into that, but tell us about your background.
Okay, sure. Well, when I was in college, I had lots of credit card debt, and I got to a point where I couldn't pay it. So I thought, instead of just doing what my friend says or my uncle says, file bankruptcy or something, I just asked the question to myself, what's going to happen if I don't pay? What's going to happen? So it took me down a path of, I ended up in court listening to attorneys presenting cases for credit card debt collections. And one day I was learning what's going to happen. I can be sued and this sort of thing. And I'm taking notes, and this is not my area. I'm science, and my interest in science and computer programming. So at this time in the early 90s. And so I watched an attorney present 50 debt collection cases in about 15 minutes, and he won all of them. And I thought, there's something wrong with this. And nobody showed up to argue or anything or defend it. And I thought, I wonder if people were to show up and just deny the allegation of the debt, what would happen, you know? And so, and the attorney speaking was not very good at it. The judge was having to correct him and all. This guy wasn't even organized, and I thought I could beat him. I could at least argue against him, you know? And so I went and got a copy of the rules, and I started reading it, and I realized that system, that whole industry for debt collections is kind of a scam. It's kind of a racket. I mean, it really upsets a lot of people, but when you get an inside view, it'll make you angry. It's not, you don't know anything. If you're just pissed off now, if you really knew what they did. Oh. So I just thought, well, I'm going to start writing a manual to tell people to do this 1, 2, 3. I came up with this like strategy, right? And it came out of the rules of civil procedure, the rules of how they do things in the courtroom. Had nothing to do with debt or anything like that. And so if people use this, which there's a version of that I use today, but if they use it, it costs like the lawyers like another $12,000, and they're going to win anyways, but it's going to cost them like $12,000 when it normally costs them like $350 to get a judgment. So I started publishing this, and this is back in the days of Yahoo groups and all this. So I was just giving it out for free, and people are using it and having wild results. They're like, wow, this is crazy. The lawyer don't call me. He doesn't call me anymore. They didn't do anything. Nothing's happening, and for months and months. And so several years went by. And of course, lawyers got kind of wised up and said, hey, wait a minute, we can fight these, So it made them work because they realized there's people out there now that are going to oppose them with a piece of paper. And that was the whole thing. I was thinking, well, it's just a piece of paper. Just deny the allegations, And so when I started actually studying it, like you would if you were in law school, which I never went to law school, but if you start looking at it, you'll realize that you can beat them. You can beat them every time in court, and you can do it because a lot of reasons. They're lazy, the system is corrupt, and just the other day, one of my clients was being sued by Discover Bank or something. And so we sued the law firm in federal court, and the law firm withdrew the case against him in state court and paid him $3,000 to go away.
Well, can we jump in here real quick? Randy
Right.
recently had a similar instance with, we won't say who, where you kind of helped work this situation along with somebody that you know, and basically, to me, it was a glorious ending.
It was not. I mean, you know the thing. We've talked about it before, but the whole point is the plaintiff, which is the I'm going to give it the scavenger debt collector, who
The
bought
vulture.
Vulture bought that from, and then tried to come after my relative for the cost of it, which was only like $400. But I said, it's not murder trial. We're going to go with this. And,
but you had to go twice, didn't you?
We had to go twice because we forgot to do the right motion and all that stuff. But then it came down to it when we sent the affidavit in and told them that they don't have the proper affiant, and there's no way they can prove it. They don't have the originating document, blah, blah, blah. Came court time. They didn't even show up.
Right.
Oh,
and that's
they just missed.
Let me clarify here. So it was about $400 to $500 case. What did your so-called relative have to pay to even? Did they have to pay anything to court costs, or they just
the court cost would have been on the plaintiff, wouldn't it?
Correct. He'd already paid it by that time.
So they lost money fighting us.
So you basically would just walk through what John was talking about, and your relative actually walked away victorious.
Yep.
Because they knew how to work the system that's been working against us for decades.
And John, the funny thing was, the judge in the prior hearing, he goes, okay, yeah, you didn't do the motion, you did the affidavit. I know where you're going with this, but we're going to have to go to trial.
He kind of helped you out.
Well,
basically.
Now I understand it looking back. And then the attorney that was standing there goes, well, I'll get my witnesses. And I snickered. I'm thinking, yeah, sure you are.
Get them to fly in from Chicago. They were going to have to fly in Chicago, weren't they?
Chicago or North Carolina. I don't know.
It was cost them thousands to get in here. Okay, sorry to interrupt you there, but we wanted to get frame it up with a real life explanation example, which cousin Randy here just went through.
All right, so some of these judges they want to hear a case. If they see a person who doesn't have an attorney, they're like enlightened by it. They're like, wow, yeah, I want to see what you have to say, because they're bored. These lawyers, they're lazy, and the judges kind of do their work for them. So, but anyway, so when I did all that, I started getting into more of the consumer market of debt and financial risk, and it just kind of expanded from there. And that was way before cryptocurrency. And I'm a computer person. I'm a math computer person, and so that really appealed to me, all this cryptography and whatnot. But for many, many years, I developed systems like for debt collections where my clients will never get levied. It doesn't matter how much money they owe. They cannot suffer a wage garnishment or bank levy or anything because of what I do with their property. So I avoid the financial risk by avoiding costs of litigation. So I don't even try. Now I don't have to even go to court. I don't even show people how to go to court anymore because I've already won the case. It doesn't even matter what happens in the court. So when we get into the area of cryptos, that's kind of different because no one's trying to make a claim on your property. But in cryptos, you have an alternative use of money, which is not taxable. And this really freezes people up and gets accountants chasing their tails and makes people frustrated because they don't understand where a tax liability comes from. What is being taxed? And it's right in our faces, but we're not getting it. And so I had to really explain this in great detail, but I start like this. People hear me say this shocking statement, cryptos are not taxable. And I say, okay, well, they're not taxable. Tell me what laws have changed. They originated in 2009 in January. Bitcoin came out. So what laws have changed? And there's none, except with this new Genius Act, which has nothing to do with taxing them, but it actually helps us. But there are no new laws imposing a tax on cryptographic currency. So the IRS came in 2014. It took the IRS 5 years after Bitcoin to define cryptographic currency or virtual currency as property. This is very important because this definition of the IRS brings the whole body of case law from 100 years of taxation and case law regarding property and taxation. It brings crypto into that sphere, which greatly helps everyone. That was very helpful and very intelligent of the IRS to do this.
So when somebody buys or sells crypto, what is it that the IRS says is a taxable event?
The taxable event is the disposition of property for dollars.
Okay.
So cryptos are
Explain.
property. If you sell it where your beneficial interests change, you sell it to somebody else, then it is a sale. And if you factor in the cost basis, you could have a gain.
So that would include if you exchange XRP for Bitcoin. When you sell one or exchange to the other, then that becomes a taxable obligation?
That's not a disposition of property.
It's not.
Trading
Okay.
Litecoin for Bitcoin, no. Even if your value goes up in dollars, that's not a gain. That's not taxable.
Even if it's two different cryptos that you exchange one for the other.
Doesn't matter.
Okay.
Doesn't matter.
So one of the other things is, how does the public, how do they keep track of their cost basis and their, I guess, their fair market value across all these exchanges and different cryptos? How are they able to track that?
For all the different transactions.
Yeah, for all the transactions.
You don't need to do that. It's a black box. So it doesn't matter how many coins you're going from. Well, let's say, give you the example of Coinbase. If you have your coins in Coinbase and you like to go in there and switch them around, and maybe you're pretty good at it and now it's worth more money, right? So the value of it has changed. But while you're exchanging your coins between coins, you're retaining the beneficial interest. So there's no sale, there's no disposition, therefore there's no gain, there's no tax on that.
So it's not a realized gain.
There is no such thing as an unrealized gain. It's either gain or it's not.
Right. Okay. It's like when Biden was talking about taxing our 401ks. Well, that's unrealized gain. I mean, yeah, it grew, but it didn't grow, and I don't get that money unless I cash it out. So is it the same situation?
I didn't hear that one, but I'm not sure how that would work, because they're trying to push this idea that there's such a thing as an unrealized gain. It's an oxymoron.
No, it's not a gain until you cash it out.
Yeah, you've got to dispose of it, and someone else has to take the possession or ownership of it, and then in exchange you get dollars. The dollars are being taxed, not the coins. Because if the coins were taxed, you could pay the tax in the coin, right?
Right.
Yeah. Imagine if I'm trading Bitcoin and Litecoin, and I do that for a few months, and I put in $1,000 and now it's worth $10,000. Let's say it's taxable. How do I pay the tax?
Well, the $1,000 you put in is not taxable.
Well, let's just, how would you pay the tax? Let's say 90% of it, your gain, your increase in value. Okay. Let's say that's taxable. How would I pay it?
Not with crypto. They won't let you do it with crypto, will they?
They won't accept it. So how would I pay it?
You wouldn't.
So isn't that a little hypocrisy there?
Right. And I'm not required to dispose of property. So that tells you, that's an indication that it's not taxable.
Wow. So there's little things that they don't tell us, and they just keep pushing it forward.
It's very subtle. So what you're doing is, there's two types of accounting that most people should be understanding. Okay, so people generally that are filing 1040s, they should be using cash basis accounting, but they're not. Their accountant is using accrual-based accounting. Accrual-based accounting is for large corporations. It's where they are actually reporting, excuse me, I'm sorry about that. They're actually reporting a value change in property. So like we're talking about, the value goes up, it becomes taxable if I report it that way. Now, if I'm a mid-level corporation, it serves my corporation to do that because I have so many write-offs and deductions. I'm playing the system. I can make a heck of a lot of money on that. But the guy that's filing a 1040, it doesn't serve him, and it's incorrect. But if you file it that way, if you file a tax return because your accountant said, go check all your trades and all this garbage and download the file and use their software, which is erroneous, and you do all that nonsense and you report it that way, it will then be correct. But you didn't have to do that, and you'll pay a heck of a lot more money in taxes, and it will be a taxable because you filed a 1040 under penalty of perjury. Now you can amend it, but it's not necessary to do that.
The government's approach to the crypto taxation, is it designed to keep people from leaving the traditional banking system? Do you feel like that's a ploy?
Well, okay. So first of all, the government doesn't have an approach. What you have is a bunch of people making comments on the system.
Oh,
the only
okay.
thing the government has done recently is, well, the IRS defined cryptos as property, but there's been no legislation. There's been nothing in the Federal Register. There's no proposed rulemaking. There's nothing. So there's the government is not involved in crypto at all. It's acquiring it. But I could tell you this though. I know quite a bit about it. I can just tell you that the technology behind Bitcoin, part of it is military technology. So this was on the munitions list, and Clinton tried to take it out. Clinton tried to remove it, but you can't do it because it was established by an act of law. But cryptography is a munition. I don't know if you're aware of this.
No.
This allows the United States to have a compelling interest in the technology. So this technology was developed by pretty much the smartest people that we have. And it was done through the resources of China and Chase Bank or the United States. And it was done for the purpose of, I believe, to help the dollar survive. And you would think, what the heck would China want to do with, keeping the dollar surviving? Well, China has a vested interest in the dollar. It doesn't want the dollar to crash either. Nor do other major markets, major economies. So it's going to help everyone if we can have a bridge from a failing currency to something that can be sustainable. And if you see that Bitcoin and all these other coins, they're not debt-based.
Mm-mm.
And that's what the Genius Act did. It allowed that type of currency to be, let's call it asset-based. That's not really the proper term, but it's asset-based. So we're going from a debt-based currency to an asset-based currency. This is where, so many people say we should go back to the gold standard, which is completely not practical. It is practical to use cryptography for money. That is very practical and useful. The problem I see, though, is that it's going to be used for surveillance. And maybe,
that's the big concern with everybody.
Surveillance and maybe imposing laws or legal restrictions on people without the legislative process, I believe, may be happening. So this is, some danger that we got to be aware of. So the taxation part of it is not such a big deal. It's just that it's such a big deal for people, but nobody cares. I mean, in the big picture, that's not the game. The game is surveillance and then controlling human behavior, managing people because of money, administratively, without laws, and forget your Congress, all that stuff. Public scrutiny of new laws. You don't have to do that anymore. Software does it. So we're heading into that realm.
Cardio miracle to me is hope in a glass. When you create nitric oxide, you are igniting the spark of life in the cell. It is the miracle molecule. That's why we called this cardio miracle, because of nitric oxide and what it can do for the whole body.
What do you say to people that, the older crowd that, like I said earlier in the show, that they're so focused on 401ks, IRAs, traditional investments? Do you see them having a hard time moving away from that just because it's what they've known their whole lives and their whole careers, and they've got a huge comfort level for it? Or do you see some of them, getting more bold and pulling away and trying out these new alternative methods?
The first thing people need to understand is that your 401k and your IRA and whatever else thing you were talking about, your pension funds, that is a tax. That's a scheme to steal the value of your property for the promise of a tax break 40 years into the future. It's a scam. That is not an investment. Your IRA and 401ks, that is not an investment. That is you being deprived of your money that you could be using to make actual real investments, and you're giving it to some fool on Wall Street for the promise of having a tax break at end of life. This is a total scam. So the pension fund itself is a tax on your opportunity to build your net worth and have your own retirement that you did with your own intellect. So let's start with that.
And I think we had this discussion on one of our phone calls. Is I think if you really dig into the whole retirement thing and all the rules they have about, well, at 50, 55 and a half or whatever it is, you can do this. So many rules to tell you what you can do with your money that you earned.
Well, if you're a Roth IRA contributor, and if you and your wife together make more than this, well, then you can't do a Roth. You can do they have something where you can do a backdoor Roth, or there's all these ifs, ands, and buts that it's all in their favor and not many of them are in yours.
But it's them taking control of your money.
Well, what they're doing is they make it sound so sophisticated and complicated that you need an accountant, right? So you're focused on all these rules and things that they created this little world over here, and you totally forgot that it was your money and you had every right to do what you want. The problem is people don't know what to do with their money. I have so many people call me and say, John, my friend said to call you. I just inherited $150,000 and I was thinking about paying off my mortgage. What do you think about that? And I say, that's a bad idea. because you're just going to lose the use of your capital. It's a poor allocation of capital. So what I tell them is take your $150,000, put it aside, maybe put in some gold bars. Now, that's not an investment. That's just a temporary measure. Take $15,000 only, 10% of it in cash, and go buy an asset that makes money. And I'm not going to get into that right now, but I can show you how to do that. So you put a little bit of money into an asset that actually makes $3,000 or $4,000 a month. Not hard to do. You don't need a full-time job, part-time job, not a new career. And you can offset your mortgage payment, but keep your mortgage. That way you're not going to get into a higher tax bracket. You're not going to be out your capital. It works all the way around. But see, most consumers, they're not taught this.
He's a financial magician.
They're giving them garbage. So that's why. So we start at the beginning. The pension funds are just a way to cheat you. So you want to be putting the burden on your shoulders of you go out and figure out what an asset is, first of all, because your house that you're living in is not an asset, and your car is not an asset, and your 401k is not your asset. These properties are someone else's asset. You're the one taking care of it, and it's costing you money. Okay, all these things. Mm-hmm. An asset would be, let's say I'm going to buy a house. That's a liability to me. Maybe the bank, it's an asset, right? So instead of buying the house first with let's say my 20% down payment, let's just say, I take my 20% down payment and I buy a house in my neighborhood that I want to live in, and I rent it out to somebody else. And then I take that rental income and I put it on my personal balance sheet and I use it for financing with the bank. And then I get a mortgage and buy the house that I want to live in. And then I use the first asset that I bought, which is an asset. Someone else is living in that house and paying me rent. I'm going to use that asset to offset my mortgage payment, which is a liability. People don't think that way, though.
Holy cow.
So what if your house is paid off? How would you look at that scenario?
That's a very poor use of capital. You need to borrow some money out of the equity, like 50%, but you need an asset to get into. It's not enough to have cash. So you need to get into something that's making money. A lot of, what I tell people is like this. You ever go into Walmart and you hear the beep, 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 beep? People buying stuff all day long at Walmart, right? Wouldn't you like to have like a tenth of a penny for all those little beeps?
Mm-hmm.
All right. So this is the first time in history in the last 15 years that you can actually be the retailer selling the product that you're buying every day. If you go into Walmart, you can buy stuff, right? You can set up a Walmart store and sell that same thing to your neighbor.
You lost me on that, bud.
You can have a Walmart store, a website that sells Walmart products that you decide which Walmart products you want to sell to the guy that's looking to buy them online. Let's say there's 8 or 10 people doing the same thing in your same market, okay? So you're just competing with 8 or 10 people. You're competing on price or position or something, but you're still going to make that sale because the volume is there. And so now is the best time ever to be a retailer, or at least have the benefits of a retailer, thanks to the market presence of Walmart. It's brand recognition, right? Walmart lets you do that. Walmart will even store and ship your goods that you're selling on your website and pay you to do it. So that's what I'm saying. I mean, you could take a small amount of money and have the same benefits as Walmart and make cash flow from people buying everyday consumer goods. That's an asset. Crazy. Not buying gold is not an asset. Gold is just a temporary measure to insure against inflation. So you'll just lose less over the same period of time as your neighbor who doesn't know about that. And then your pension funds are a big scam. That you're just totally losing money. And then buying your house and then planning on selling it in 30 years doesn't really help you, because even though you get more dollars for it, you've lost the buying power over that time. So you're really breaking even.
Well, look what you've paid. If you buy a house now and you pay on it for 30 years, you're paying like 2.5, 3 times for it when you're done.
Exactly. Yeah. So it's okay. It's good to have a mortgage. I mean, it's not good to have a debt-free house for a long period of time. You want to have some debt on there, but you want to use that cash out of the equity to go do something that's going to make some money. And then, come back and offset your mortgage payment.
Man, I never thought about that. You're letting your equity not make money for you.
You want to have debt. Debt is good, but debt that acquires assets. And just because you have $15,000 in cash doesn't mean you can only buy a $15,000 asset. You can take a $15,000 amount of cash and buy a $100,000 asset.
So probably what all the billionaires and millionaires are doing. Just that thing.
That's exactly what they do.
Yeah.
That's exactly what they do. Yeah. They have a big problem that the larger billionaires, I'm talking about, the ones over 100 billion dollars, you're seeing now the development of smart cities.
Mm-hmm.
Okay, smart cities are concentration camps,
Mm-hmm.
and they're being funded, and it's a desperate need of these super rich people. Okay, they're out of investments. They cannot buy enough assets. There isn't enough out there to go buy, so they have to create an asset. And one way to do it is to go on this green agenda, which is a total scam, but go in there and build a smart city, as they call it, and just own the city. And so when you do that, you're owning the resources in that city, which includes the people. You're owning the labor and everything. You're not owning it, but you're monopolizing it. And it's a very good asset for these super rich people. That's what's behind these smart cities, because they don't have any other place to park their money.
All right. Well, I
So-
want to go ahead.
I was going to say, I'm guessing with your debt is good. You're not a frequent guest on the Dave Ramsey show.
Oh my gosh. No, he's such, well, I mean, he's just selling. Oh my gosh. It's so sad. I don't even want to hear him because it just makes me angry.
Yeah. So
I mean,
back.
some
Go
the
ahead. I'm
things he
sorry.
says are correct, but I mean, it's wrong because he's really helping the system exploit consumers.
I guess you could see it that way. So back to the crypto, I want to be sure that we cover the crypto part, the taxation. Hopefully, we've got a lot of accountants watching. Anything
Okay.
coming up in the next couple of years legally? Any new things that we need to know about? Anything with like a 1099 DA reporting rules for
Yeah,
exchanges?
the 1099 is just simply a report to the IRS about the disbursement of funds for the sale of property. Okay.
Okay.
There has always been a 1099 in some form or another, and there's many different variations of the 1099 form. And then recently in the Federal Register, you saw the development of the 1099-DA digital asset, right? So a lot of what happens in the news and on these type forms, and the IRS comes up with these publications, is just part of the game. It's to intimidate people and to scare them into thinking that something is new, that now they have to do a thing, right? So the 1099 DA is just like a 1099K, 1099 INT. It's the same thing. They just called it something different. And it's reporting the sale of something. It's reporting that something that could be a gain. And it causes the IRS to have to reconcile, with the 1040. So the 1099 DA does not create any new tax situation for anybody. It's just a different document. It is approved by the Office of Management and Budget, so it's a correct official form that should be used, right? And it does nothing else. It's just the same business as usual.
When we start looking at when small businesses will allow crypto for purchases, what are some do's and don'ts would you tell people when they start paying with crypto to these retail establishments? What are the do's and don'ts to that in maintaining compliance with the tax laws?
Well, the customer is not going to have a problem. It's the business has to treat it as dollars, even though it may not be. Now, I know what they'll do is on their software and their accounting, they'll convert it to dollars immediately. But if they didn't, if let's say Walmart did not do that, kept it as Bitcoin, the IRS would treat it as dollars, just so you know. So it looks like a barter exchange.
We've kind of covered the gamut of the taxation piece of it. I'm sure there's more that you have to add. Is there anything more that we need to tell the people?
I can let you know this. So I'll give you the example on the exchanges. So when you put dollars in your bank account and you move it over to, let's say, Coinbase, for example, and now any exchange is going to be the same thing that I'm describing here. So you have dollars on your Coinbase account, and then you can allocate those dollars into the coins. When you do that, you're using Coinbase's software. Now, I'm not talking about the software that's counting whether or not there's a tax situation. I'm talking about just its software that's the interface, the API, some people would call it, the interface to the customer, okay? This software reflects trades when you move from one coin to another on the exchange. The software is showing you the trade, but it's not reflected in the blockchain. The reason is Coinbase owns the coins that you just bought on Coinbase. Legally owns the coins because it holds the private keys. So the nature of the Bitcoin is that he who has the private key is the owner. Just like in real estate, he whose name is on the title is the owner. He has the exclusive right to sell it. Now, the way it works is with Coinbase is that it makes Coinbase the trustee of the money. So it's a trust. The whole transaction is a trust. When you take your money out of Coinbase, the trust collapses for each unit, right?
Mm-hmm.
So because it's owned by Coinbase and you're trading between coins, this is just one example. You're trading between coins, the ownership of the coins does not change, which fits right into the definition of no disposition of property. Now,
So is
yeah.
it the same thing as me transferring $500 from my checking account to my savings? Kind of the same situation?
Yes, correct. That is right. The beneficial interest, that's like taking my gold coin in my right pocket and put in my left pocket.
Okay.
Yeah, it's the same thing, right? So just that, I can tell you more, but that alone, the fact that the ownership never changes when I'm moving coins around on the exchange. And then when it's worth more, maybe I'm really smart, right? It's like 10x, right? And then I start taking my money out. Let's say I start selling for dollars. When I sell for dollars, then I have a tax liability because the dollars are taxable, not the coins. So how do I know how much tax? And you asked me this earlier. The way you know how much tax is not the software the exchanges are using. It's completely wrong. You should never follow that. And if your accountant's talking about cryptos and this stuff, you got the wrong account. Fire them. Get somebody who understands it. Cryptos are not relevant. What the way you figured out is, let's just give it a simple example. All my whole $1,000 I put on the exchange, I trade it around, and now it's worth $10,000, and I take it all out into dollars. So what's taxed is the $9,000, right? That I got from this is my gain, right?
Right.
All right. The cost basis is my $1,000. So I can use simple algebra to figure out my cost basis and figure out my taxable portion, and I can calculate my tax using algebra. Very simple math. And if you do it more complicated, let's say you just take out a portion of it, right? There's a very simple algebraic equation, and I've done several videos on this explaining how this works. Very simple algebra that you can calculate and factor out your cost basis and figure out what your taxable amount is. So here's what's very interesting. Just to make my point. So instead of me just going off and telling people this, I have no credentials. I'm not an accountant. I'm not a CPA. I'm not a lawyer, but I know all these things and I teach these guys. I teach their clients. I teach them. And so I figured I'll just ask the IRS. The IRS defined it. Let me just ask. So first of all, I asked the IRS, if I want you to make a legal determination or analyze a legal determination that I make myself, how would I present that to you? And so the IRS gave me a book. The IRS actually has a book that tells you how to write a letter to the IRS and ask for a legal determination, which is what I did. It's a 6-page letter. The IRS prepared the letter. I put in my statements of fact, my legal conclusion, and the purpose of the letter is to ask the IRS if it agrees with me, because I already made the conclusion. And so anyways, without getting too technical, I did that 22 times. And each time the IRS says, we agree. We agree that what you just described when I'm trading coins on Coinbase on an exchange, that activity is not taxable no matter what the value changes. It's not taxable until you dispose of it for dollars. That's essentially what the IRS said, but they actually had a cryptic response in each of my letters. It just said something like, we agree, or take no further action. They don't like to say too much,
Right.
But I got 22 determinations. And after that, I stopped asking them because I realized I could do the same thing I used to do for the 1099s. That my clients were getting 1099s for debt collection. So they were not paying the creditor. And so we were excluding the 1099 from the 1040 because that's the proper thing to do, because it's not taxable as imputed income because of two conditions. And I don't want to get into too far into it, but it's not taxable. Okay. In most cases, there are some cases where a 1099 for not paying a loan back is taxable. It depends. But most of my clients, we just excluded the 1099 and no problem. No one ever got audited or anything. I did like tens of thousands of those. So with these IRS things, I get a lot of people asking me about the erroneous 1099s and so forth. And what I tell my clients now is simply exclude the 1099 that's erroneous from your exchange and just go ahead and report it correctly. Just report correctly. Like if you sold some coins for dollars, go ahead and just include that as other income, and that's it. It doesn't matter that it's cryptos.
Right.
And this drives the accountants crazy because they're wanting to know about your crypto holdings, And I always tell my clients, look, tell your accountant that's not relevant. What's relevant is I bought property with dollars, then I disposed of the property within such period of time for dollars, that's all that he needs to know. It's not relevant that it's cryptos.
Well, this has been, I really love all this information. And what tickles me is when we go to your website, you've got a lot of courses that you sell, correct?
Yes, correct. Yes.
All right, let's take a look at this. They can find you at aceofcoins. Is it .com?
Yes.
Okay. Tell us a little bit about your website and what you do and all the fun stuff that you're revealing today.
There's a list of subjects. So I deal with financial risk and financial risk management. So that's how I look at it. And some of that deals with privacy. Some is involved. I get involved with family court, because in family court, this is not really a divorce proceeding. What they're doing is they're liquidating people. It's an involuntary receivership. So I get into these things with property rights. I get into other things like, for example, privacy, where, like, say, for example, my client's opening an account with this limited liability company I set up for him. He's opening his account at Coinbase, and Coinbase is asking for crazy documents. And so I deal with things like that regarding, privacy and I guess disclosure of information that relates to your property. But the core of it started when I was dealing with the debt collections. So you'll find on my website, aceofcoins.com is a way to schedule time with me and then pay for consulting. So I have a consulting program where I cover a wide range of topics that deal with financial risk. So I look at paying more taxes than you need to as financial risk. If you don't know something, you're going to pay more than you need to typically. So I correct the client. I reorganize his property. Sometimes I help him buy an asset. Sometimes I help him decide how to buy an asset, things of that nature. So the categories include, in those videos, you'll see debt collections involving, credit cards, foreclosures, unsecured debt collections, IRS collections, state income tax collections, even student loan collections, debt collections. And then I get into, we look at the credit and this sort of thing, but I focus more on the use of your money. And then I get into the cryptos and planning. Now that's interesting because I'm not putting out fires with the cryptos. I'm actually planning. So I always end up restructuring the client so that he does not have tax liabilities, or minimize them to a very small level, so that when he's buying and selling cryptos and he's then, let's say he makes a lot of money with the crypto, he can dispose of the crypto, buy other things, and still not incur the tax liability because of the way I structure his ownership of the property. So when I deal with financial risk, the way I manage it is with changing the property rights for my client. So I'm able to change the property rights in a way that legally avoids taxation or legally avoids the risk associated with debt collections.
Okay.
So that's a large part of what I do.
You have on your website too, John, conferences. Do you have just live events that people come to, or is that all virtual, or what?
Right now I have Thursday evenings at 7:00. I've been doing for many years. And I try to cover the topics over and over again, new topics in a different way, things that are popular. So yeah, on Friday, or every Thursday evening at Eastern time at 7 p.m. Now I announced that on Telegram at Ace of Coins. We have an announcement list at Telegram.
Okay.
Yeah.
The other thing that I was thinking of was, you've got all of these things that you do, that your expertise. And after Darren and I have talked about this whole debt collection thing, it just seems to me that all of this stuff is a system of deception.
A racket.
You'd think if our government and our laws were to help the people, then why would they try to prey on the ones that don't understand the law? And they make it so complicated that you can't understand the law.
And when those people who do understand it, they still the attorneys try to deny you access to the court and these sorts of things and remedies.
So if somebody wants to seek consulting from you and get some services, maybe they need some help with a divorce, or they need help
Custody
with
of a kid or whatever,
crypto, whatever
Right.
it may be. I know you've got easement stuff that you do. You've got a whole menu of things that you can help them with. How do they go about doing that?
They would go to aceofcoins.com and they can schedule a time to talk to me. There's a calendar there.
Okay.
That's probably that's the usual way. I mean, people can email me. There's no guarantee on a quick response. I get a lot of email, but getting on my calendar is good. My email is singletonpress@protonmail.com.
Okay.
And then aceofcoins.club is the membership. You can subscribe for free. I don't know if there's a contact us link there, but the best way is the aceofcoins.com.
Okay. And if you go to aceofcoins.com/grit, that can help us out because we're promoting Jay here, and it'll help us keep shows on too. So we always like to have solutions for all the problems that the government and the evil people create for us. So always want to have solutions.
We're trying to collapse the overreach.
Yeah, there you go.
That's what we love to do.
Yeah.
As we talk more, you'll see that there's many other really compelling subjects that we can cover. That I could show you like case histories. I could talk about actual cases that I was working, and you'll see firsthand the kind of corruption I've been faced with. I even had one of the one client that got that payment from the lawyers. He wanted to do the case. I said, look, it's a lot of work. I said, I don't mind helping you, but are you willing to do it? He says, yeah, let's do it. And he came back just totally shocked. He said, I thought it was corrupt. He didn't know how corrupt it was. He was so shocked.
Mm-hmm.
I said, this is what I deal with all the time. I mean, it's to a point where if they know you're smart and you're trying to fight something, they'll just do something simple. The lawyers, they'll do something simple like deny you access to the court. Like they'll just ignore your request for a hearing. They act like you didn't. Yeah, you file a motion and you need a hearing on it, but they ignore you. The motion's there, but you don't get heard. But the attorney gets heard.
Mm-hmm.
It's so simple, all these things. So we have ways around all that.
Well, Darren, Jay's got a wealth of stories like that.
Absolutely.
And, I want to hear things. I think we've talked about the balance sheet that the courts hold and how the judges and the courts are making money off all this stuff. So we've got a lot of stuff, and Jay's going to be back on next month, and we'll have another intriguing topic because when I talked to him, I was like, holy cow, I hit the mother lode here. We got somebody that knows it all. So,
well, I got lots of stories to tell you. So.
Yeah. Well, I appreciate you coming on, and we'll look forward to seeing you next month.
Thanks so much.
All right, John Jay Singleton, aceofcoins.com. Glad to have you on here and looking forward to having you back, my friend. Take care.
Before we go, I want to be sure that everybody's aware that the Grace Shara trial that we've heard about, it went badly. The hospital killed her using the protocols. They went to court. They didn't rule in favor of the Shara family at all. They let the hospital off. And because of this, we felt like that there was some nefarious action going on, that if they would have ruled in favor of the Shara family, the medical industrial complex would have been on its head and would open the door to other lawsuits.
So Scott Shara is Grace's dad, and he's been a guest of our show and a friend of our show for probably 2 years now. And if you haven't watched these episodes with him, you really should, because it was a tragedy what happened to his daughter, 19-year-old Grace Shara, who had Down syndrome. Like Randy said, she was murdered in the hospital, I believe, in October of 2021. If you go to GiveSendGo.com, the sky is the limit. GiveSendGo.com, the sky is the limit. You can help fund this court case. They went to court in June 2025. Sadly, the family lost. But as I said the day that the proceedings were over, Randy, I said my biggest question is, I wonder who got to the jury. So Scott and his family just filed another motion to have another trial because everybody knows that it was a nefarious outcome for them. So if you would, go to GiveSendGo.com. The sky is the limit. Right now, they are about half funded. They are raising $250,000. And right now, they are a little over $120,000 funded. So we are making a plea for all of our viewers and our audience to help fund this case because we need to turn the medical industrial complex upside down and get medical freedom back in America.
And to let you know that $250,000 is not going to go very far. I think he said they had over $1 million invested in it in the last trial. And for him to file the motion for retrial cost him $10,000. This is not just for Scott and his family. This is for the medical industrial complex being held accountable. So please give what you can. Thanks.
Well, thanks so much for watching today's episode. Make sure you visit patriotswithgrit.com for more eye-opening videos.
And be sure to check out our Patriot Partners store for great products and services. Any of your purchases will help support each of our shows.
Also, share this with your friend and follow and subscribe because here at Patriots with Grit, you always get the truth.